What's going on, guys, and welcome back to another video. So in today's video we're going to dive into my trading 2-on-2 portfolio and have a look at my consumer staples pie. Currently there is 3 holdings in this pie and they are all 3 dividend aristocrats. But before we get into today's video, if you're new around here, please consider subscribing to this channel, as we are currently on 318 subscribers and our next goal is to get to 350. So with all that being said, let's dive right into my trading 2-on-2 portfolio pie. So currently my trading 2-on-2 consumer staple pie is worth €206. We are currently up 3.2%, and the 3 companies that we have in this pie are Coca-Cola with a 40% weighting. We are currently up 2.21%. Pepsico with a 30% weighting, and we're up 4.43%. And the third company is P&G with a 30% weighting, and we're currently up 3.35%. The first company that we will look at today will be Coca-Cola, which is an American multinational beverage corporation headquartered in Georgia. The Coca-Cola company has interests in manufacturing, retailing, and marketing of non-alcoholic beverages, concentrates, and syrups. Coca-Cola is traded on the New York Stock Exchange and has ticker symbol KO. And at the time of recording, their share price was just over $50 at $50.10. If we scroll down here, we can see that their forward dividend is currently at 3.26% or $1.64 per share, which is paid on a quarterly basis. On Coca-Cola's 1-year chart on Yahoo Finance, we see here that this time last year they were sitting at about $53 or $54 a share and went up to about $59 or even $60 a share, and then took a nosedive in the middle of the pandemic in March and went down to about $38 a share. But since then they started to recover, and they're only about $2 or $3 away from their pre-crisis share price, or the price this time last year. So they're definitely starting to recover. Their top 3 institutional shareholders are firstly Berkshire Hathaway's Warren Buffett with 9.31% holding, Vanguard Group with 7.51%, and BlackRock with 6.94%. The second company on today's list is Coca-Cola's main rival in the form of Pepsico, which is an American multinational food, snack, and beverage company headquartered in New York. Pepsico has interests in manufacturing, marketing, and distribution of grain-based snack foods, beverages, and other products. Pepsico is traded on the Nasdaq and has ticker symbol PEP. At time of recording, its share price was $140.10. And if we scroll down here, we can see that their forward dividend in yield is currently 2.93%, or roughly $4.09 per share, which is paid on a quarterly basis. In terms of Pepsico's 1-year chart, it is quite similar to Coca-Cola's that we just mentioned. This time last year, their share price was roughly about $136, and it went up in about the middle of February and then crashed and had a nosedive in the middle of March for obvious reasons and went down to about $100 a share. But since then, it has recovered fully and it's kind of back to its pre-crisis levels at the moment, which is definitely good to see. And certainly with companies like Coca-Cola and Pepsico, around Christmas time, their share price tends to increase even more. Pepsico's top 3 institutional holders are the Vanguard Group with an 8.87% holding, BlackRock with 7.4%, and State Street with 4.63%. And the third company in my consumer staple pie is P&G, which is an American multinational consumer goods corporation headquartered in Ohio, founded in 1837 by William Procter and James Gamble. Now, also, just like Pepsico and Coca-Cola, P&G is yet another consumer dividend aristocrat. So it's great to see all 3 of these companies in my consumer staple pie being quite sustainable and profitable dividend companies, because a lot of my other companies in pies, such as my tech sector company pie, they are non-dividend paying as such, and if they do pay dividends, they're quite small, as they're a lot more focused on growth instead of actually paying out dividends. So it's good to have a balance throughout your portfolio of both growth and dividend based stocks. So Procter & Gamble has ticker symbol PG and is traded on the New York Stock Exchange, and its current share price is sitting at about $143.70. And in terms of their dividend, we can see that their forward dividend yield is currently 2.22% or $3.16 per share. We can see from their 1 year chart on Yahoo Finance that they've made quite steady and quite impressive growth over the last year. This time last year, they were sitting at about $118 or $119 a share, had their nosedive in March, like 99% of the companies, went down to about $97 or $100 mark. But since then, they've started to go on an upward trajectory, and even since, let's say, the middle of June, they started to take off from $115 and have gone up another $25 or $27 a share, up to their current price at about $143 per share. So that's definitely quite impressive to see that they've made such a quick comeback from the crash in March. P&G's top 3 institutional holders are the Vanguard Group with just under 9% holding, BlackRock with 6.61%, and State Street with 4.68% holding. So with all that being said, that was just a quick, brief rundown of the 3 companies in my consumer staple pie, which is currently worth just over €200. Again, Coca-Cola, which is up 2.2%, Pepsico up 4.38%, and P&G is currently up 3.57%. Over the long term, as I'm a long-term investor, I'll be buying these further on the dip to improve my dollar cost averaging. And if this video was any way helpful, it would be great if you could consider smashing that like button. And as always, if you're new around here, please consider subscribing to the channel, as it would really help me out long term. And finally, in the comment section below, if you have any companies that you would think I should have included in my consumer staple pie, comment below and your reasons behind that. And also, if you think I should have omitted any of these 3 companies, if you think they're overvalued, or if you think their long-term longevity isn't as good as some other consumer staple stocks. So thanks very much, guys, and I will see y'all in tomorrow's video.